I don't know if you guys realize this, but talking and nobody talking back is it's different. It's different. It's challenging. Unless you're kind of a crazy person. Actually, it takes a little bit of a crazy person to talk for an hour with nobody talking back. So I appreciate Dina saying hi. I appreciate you guys with your cameras on, Tyler, Lori, Tristan, Lindsay. It makes it actually nice to see some faces. So when I say something that's not funny, I realize that it's not funny, and then it's something that I think is funny, and Tyler laughs, that makes me feel good. So if you guys want to make me feel good, just laugh at things that might not be that funny, but it reinforces me for trying. And that's what we're trying to do, guys. We're trying to reinforce the behavior, not necessarily the outcome. Okay. So yes. And most importantly, I just appreciate you guys, even with you guys who don't have your videos on, I appreciate you guys for showing up, because ultimately that's the that's the reason that we keep doing this, is because you guys keep showing up. And if you guys are able to show up and get value from it, then I think that that's ultimately what the goal of this call is to provide value in some way or form. Maybe that isn't a value of a distraction. You're like, man, cleaning business on Monday sucks. Cleaners calling out, clients canceling. It's like, this sucks. I need something to look forward to on Monday. Cool, right? And if during this call, you can also try to find systems and processes on like, how do we minimize those things? How do we just expect those things to happen, and for us to like have less emotional swings because of those things? Maybe that's a positive thing. Or how do we eventually actually put ourselves in a situation where you're not the one who's handling the cleaner call outs and the clients who are canceling, and then all of a sudden you're like, I'm just coaching the person on who's doing those things. And we're like, regardless of where you're at on that, that is hopefully what this call is to help you navigate and manage the problems of business. And also to set expectation that there's always problems. So Dina, Lindsay, Alexis, Tristan, Tyler, Lori, Kayla, Dawn, Anna, what's up, Anna Harris, Randy, like expect to always have problems. If you're making 20,000 a month, 100,000 a month, $200,000 a month, like you're gonna have problems. As long as you just understand that like that's a condition of doing business, then at that point you just choose like, do you want to stay in business? And if you do, then let's actually build a business that you can actually do for a long period of time. And that's really what we're talking about today, is like, how do you build $1 million business? And while the million, it really signals money, but what it really underlying signals is freedom. And when you have money, it gives you the opportunity to provide for you, yes, but really to provide for somebody else. And that somebody else is a person or the people who are actually going to operate your business. And that's what a business actually is when you as the owner are not part of the system. When you're not part of the doing of the thing, that's how you have something that is an asset. And one of the best ways to think about, like, do you have an asset or not, is, well, if you guys don't show up to work today, does the business, number one, function at all? That's basic. Like, could your business even function without you at all? Number two is, if it could function without you, for how long? Next thing to think about is that if it can function for you, if it can function without you, would it actually grow without you? And so those are actually like, and there's probably like a couple other like different steps in between there, but those are probably like the big three ones. And so really, like, the first step is like, how do you get the business so like it just doesn't rely on you? So like, if you want to take a nap during the day, if you want to take a day off, like the business can still function. And then the second step is like, how do you get it to function for like a period of time? Like, what if you want to take a vacation? What if you want to like take a trip? What if you want to like not work for a week or two or three or four? And then the last one is probably the most powerful one, which is, how do you get the thing to grow without you? Because if you can get something to grow without your operational involvement, that skill set will not only help you in your current business, but if you want to do multiple businesses, it will give you the time freedom to be able to do those at a very high level. And so it all comes down to money, right? And so today, Katie, what are we talking about today? We're talking about profit margin. So we're actually going to break down how to achieve a 20% profit margin. Now, the reason that this is important is because there has to be money left over in order for your business to be able to operate without you. Okay. And so the majority of these calls, the majority of what we talk about is how to make money. Okay. Because that really is the first step. And so without you actually making money, then it doesn't matter how much profit that you make, because there's just like, there is no profit when you're making $0. And so we're going to break down how to achieve a 20% profit margin. But one of the things I want to put in here, one of the asterisks, and this will be on the doc that gets shared with you guys, is these profit margins are targets for businesses above $60,000 a month. This is super important. If you're making less than $6,000 a month, I do not care what your profit margins are. You don't have enough revenue for you to, number one, pay yourself, and then to eventually pay somebody else to operate your business. So like, I do not care.
Even if your profit margins were 100%, so what?
Yeah. Well, if they're 100%, then you're in a different business, because there's no way that they can be 100%. But in this specific business, like, there is not enough profit under 60,000 for you to be able to pay your personal needs and have enough money for you to pay for somebody else in the office to be able to operate the business. There's just not enough money. Okay. And so that's why there's like a race to 60K. So if you guys are below 60K, like, that's why it's just focus on growth. Like, who cares? Like, reinvest your profits, which you don't have any profits. Okay. You just reinvest until you get the revenue to at least 60K. Now, here's what I will tell you. Like, 60K is the minimum. I'm not saying it's the goal. Okay. 60K is just like, it's like you get the comfort air. There's like a little bit of breathing room. Okay. I'm no means advocating that 60K is the goal. I'm just saying it's the first revenue mark where you're actually able to make a little bit of money. Okay. And also have somebody else in the office with you. Okay. So that's like, so like when we break down these profit margin numbers and your business is under 40K, like, these numbers are not going to make sense for your business. And I'm going to explain exactly why as we go through each one, why they don't make sense. Okay. And again, I don't care. I don't care what profit margins are at 40,000. I just, like, get to 60. Reinvest every single dollar to get to at least 60. But really the goal is you want to get 83K. And then you want to do is you want to get to 100K. And then really what you want to do is you want to get to 200K a month, yes, per month in revenue. Because when you have enough revenue, then we can actually talk about the profit margins. Okay. Let's do this. Okay, let's break down the profit margins for a 20% home cleaning business. Okay. Now, just as a reminder, before we get into this, guys, this doc of all these margins will actually be uploaded into the school group. So if you guys are inside the paid community, if you guys go under the Road to a Million replays, James will upload this in. He'll upload the replay in here, but he'll also put in here the doc, and it'll actually share with you guys all the percentages. So if you guys want to take notes, cool. But these notes will be inside the school group. Now, if you're inside the free group, they will also be inside there as well. So if you're inside the free home cleaning courses group, James will also upload the replay and the notes inside there. Okay. So, and last week we talked a little bit about we introduced the 20-day challenge for you guys. And yeah, I don't know if I should have, because we had lots of applications. And at this point, we actually only have one spot left. So if you're not currently in the coaching program, and you're interested in potentially getting access to the home cleaning business, then the way that you can do that now is through the 20-day challenge. And so James will drop the link inside the chat for the 20-day challenge, and you can see how you can enter the community and get access to the system and see if it's a good fit for you, and honestly see if you're a good fit for the community. So, but outside of that, again, there's only one spot right now. We have 7 people who are in the challenge, 2 people who have onboarding scheduled this week. And so that makes it we have one spot currently. So keep it at 10 to make sure that for every single person I can give the attention to make sure they can build the system and have questions on the system. And yeah, I don't know if Megan Brown's on here, but she just sent me a message this morning about Facebook ads. And yeah, it's like, while the system works, like you have to learn how to build the system and you got to learn how to work the system. And then once you get that past that piece, then you get to do with like what Tristan and Alexis and Tyler are doing is like just then use the system to actually make it grow your business. So different levels to the game. And then once you get to the place where like Jessica and Lucas are, where their business is projected to do $94,000 this month. Julia Callahan, her business is projected to do over 90,000. Kayla Irby, over 120,000. Jacinta, over $80,000 this month. Like once you actually start to make money, now guys, we're gonna talk about like, how do you keep money? And part of keeping money is understanding like what expenses make you money. I'm gonna talk about some expenses that make you guys money. And I'm talking about what expenses that maybe you're fat on. Maybe you have too much of this expense in your business. And give you guys the template of how to get to a 20% profit margin. Now, Katie, is 20%, like, is that what our business is every single month? Is that 20%?
No.
So we're liars.
But on average, 20%.
So sometimes we're above, but guys, sometimes we're below. Okay, hate to break it to you, but sometimes we're below. And now we don't measure this month over month. We actually measure this over the quarters. Because how many of you guys realize that this month, you guys are probably going to be less profitable? Does anyone know why you're going to be less profitable this month? Does anyone know? Let's see if you guys, I can tell people who are actually making money because they will start to see this number. Can anyone tell me in the chat why you guys are going to make less money this month than you guys did last month? Yes.
Yep.
Ann Harris.
Good job, Anna.
Somebody who's actually making money, right? Right. And so you have 5 weeks of payrolls. So like this month, you're going to be less profitable. Last month, you only had 4 payrolls and you had like 3 or 4 extra days. So last month, you were like, I'm rich. And this month, you're gonna be like, I'm poor. And in between being rich and poor is like, you're this, right? You're above average, maybe. But that's what the goal today is, to give you guys a template. And also, just so you guys know, we actually measure this over a quarter. And so Q3 just ended last month. So from July through September was Q3. And then now October through the end of December is Q4. Okay. And so hopefully for Q4, you guys can see how you guys can get closer to a 20% profit margin. Okay, let's break this down. So what is going to be the biggest expense, the biggest category on someone's profit and loss statement, which is going to be inside QuickBooks? So hold on, Katie, before I have you answer that question. If you guys are not using QuickBooks or some sort of variation alternative like Wave or some sort of bookkeeping software, like, come on. Like if you guys want to have $1 million businesses, you must have $1 million systems. Okay, part of having $1 million system is like having QuickBooks, having an accounting software that does this for you. Like if you're still doing this on pen and paper, like it's time. Like if you want to actually have $1 million business, like you gotta get online, get QuickBooks Online as an example. Okay, and so on your QuickBooks Online, it's going to give you specific categories. Okay, and one of those categories is going to be your cost of goods sold. And so, Katie, this is going to be somebody's biggest expense category. So we show the people what is cost of goods sold?
Cost of goods sold is actually my favorite expense to see as a line item because this is directly correlated to production of revenue. So this includes fulfillment of every single clean. So this is cleaner wages, payroll taxes, workers' comp and unemployment insurance, subcontractors, supplies, anything that is associated with fulfillment of the service, direct fulfillment, uniforms. That's about it.
Yeah. And so again, you could potentially have different categories. Like this is exactly what we categorize as COGS. Okay. All those things that Katie just talked about. And from a percentage of 100%, so let's say that guys, 100, we're going to start with 100%, and our goal is to get down is to keep at least 20. So how much are we going to allocate of our 100% of revenue towards cost of goods sold, Katie?
55%.
55%.
And a disclaimer, this is at how much in monthly revenue? $60,000 per month is when these numbers start to make sense. Nothing below that.
Yeah. Yeah. So just as a reference, Katie, cost of goods sold actually is the only number that
Scales accordingly.
scales. And again, like if you're growing really fast, then like you'll buy lots of vacuums, you'll have lots of supplies. So like when you're only making 20,000, like it's a big investment when you're spending 600 or you're spending $350 on a vacuum as an example. So your wages will scale, but like supplies, they actually add up a lot when you're small. But as you do get above 60, then like buying a $350 vacuum when you're making $60,000 a month, like it's a less of expense, right? But this one is the one that scales the most from zero all the way to 60K is your cost of goods sold. So
This expense is a great expense
yeah,
because this means that you have cleaners behind vacuums, pushing vacuums, producing revenue in clients' homes.
yeah. This is one of the expenses, guys, that will make you money. Like you want to see this high. Mind you, guys, like in Bozeman, and I didn't look at this actually. Maybe Katie, you can find this exact number, but like I think that like the closer that we can get to like having like getting to $1 million in cost of goods sold, like that means that our business is just getting bigger, right? It would be closer to getting $2 million as an example. So maybe Katie can figure out that like what our cost of goods sold is uh, for Bozeman. But so you guys understand, like this is an expense that will make you money. Like you want this expense, okay? One of those expenses that will make you money. Okay, so now guys, we went from 100% to automatically 55% cut out. So that means we're left with what, Katie? What percentage are we left with in income?
45%.
45%. Okay, cool. We'll have no other expenses. Now we can make lots of money. Okay. Um, let's talk about the next.
Hold on, I
biggest-
have one more thing to say
oh,
about cost of goods sold because
oh,
this is exciting. When you guys start to scale and when you guys start to grow, what is the first thing that grows is your payrolls. And when you process payroll and you're like, "Oh my God, I have a $5,000 payroll that I have to process," like get excited about it because that's essentially revenue that you are not producing. Somebody else is out there producing it. When it gets to $10,000, oh my God, we have a $10,000 payroll. Hell yes. It's the most exciting like expense you can have on your sheet. It's amazing. The bigger the payroll expense can get, like it's epic because your revenue is growing.
again, these are like some of the small tweaks in your guys' like when you guys look at like when you guys look at your P&Ls. So just as a reference, when I say P&L, I'm referencing profit and loss. Okay. And your profit and loss is what shows you how much money comes in and then all the expenses that come in with it. And so when you guys get excited about certain expenses, like your wages, you're like, wow, like I just had a $10,000 payroll. I'm telling you guys, like get excited about it. Just like what Katie said, get excited. The more excited you can get about making other people money, the higher probability you will make more money. Okay. Okay. So we're down to 45%. Now, again, because now we're above 60,000, this is who we're talking to, guys. If you're below 60,000, just want a reminder, these are numbers for people who are above 60,000
Per month.
per month in revenue per month. Yeah. Um, so there was I'm running an ad to get people into the free school group. And so lots of you guys run ads for you guys who do run ads. You guys have some crazy people in there, right? Now imagine for running an ad for a coaching service, like there is crazy people out there who are business owners. If you guys didn't realize that, but there was a comment on one of these ads, and the lady was like, "No way, someone's making $60,000 a month." And it was cool. It's cool because like I actually used to think that too. I used to be somebody who was like, "There's no way. Like you must be either be like lying, you're probably like trying to sell me something or whatever. Like there's just no way someone makes $60,000 a month." For you guys who are inside the coaching community, last Wednesday, I released a brand new module inside the community, and it was called Million Dollar Milestones. And the top milestone in the group is a $2 million monthly run rate. And that has only been achieved by one business, and it just happens to be Katie and I's business in Bozeman. And it's done it, I think, 2 months. It achieved over $166,000 in a month. Okay. So that was the top milestone that's happened inside of our community. And then the next milestone below that was achieving $1 million in annual revenue. And that has only been done with, I think, 3 people, right? That's with our location. That's with Kayla Irby. She's in Boise, Idaho, and Jessica and Lucas. They just did a couple weeks ago. And then the milestone below that that we released, or that is inside the other milestones, is $83,000 a month, which is a $1 million monthly run rate. But you got to do that 12 months in a row to actually get to the annual revenue. And so the same people who have the trailing 12 months, so Bozeman, and then Kayla and Jessica Lucas, they're obviously inside the 83K, but also now we add Jacinta Roberts and Julia Callahan, who's on here as well, to add to those milestones. And then below that, we have one more category. We have one more category, and that's people between $60,000 and $80,000 a month. And inside there, actually don't know if people are inside there, but I think there's like 10 people who are inside there. I think Tristan's on here. He's one of those people. Alexis is on here. She's on here right now too. Sorry, I'm sure there's more people. I could probably scroll right here and see if there's anybody else on here. Renee Krause. Sorry, Renee. She's at 59. Sorry, I didn't really mean to rub that in, Renee, but maybe this month you'll get to 60K.
She's skipping 60. She's going straight to 70.
She might go straight to 70. Yeah. So anyway, there's about 10 people in the community who are between the 60 and 83K mark. But again, it's intentional because at the end of the day, like it is not easy to get there, guys. Like I just want to be that really clear. Is like I'm not trying to state this as like it's just like, oh, you guys should be there. Not at all. Like it's very difficult. It's very challenging, and it takes a lot of work. Actually, what it takes is a lot of sacrifice. It takes a lot of sacrifice. It takes a lot of prioritizing your business ahead of things that most people aren't willing to prioritize. Family, their current bank account, their egos. That's probably the biggest one. Egos is probably the biggest one. I think ego is a domino. Like if you can knock the ego down, then a lot of those other things you have perspective to understand that there's certain seasons in life where like you must give before you get, and that's really what it comes down to. Is like there's a season of giving, and this the expectation of what's required to give is much more than you think it is, and it's going to take a lot longer than you think it is, and it's going to not feel as good as you think it should feel.
I think a lot of people believe that if they give their best, it will be good enough. And
Yeah.
when you start to grow, you realize that growth requires more than your current best. That's exactly what growth is more than your current best.
Yeah. And I think that's where the humility comes down to is like being okay with like your best isn't good enough. Sorry. Like, and then I mean that in the most sincere way possible. And I think I wish that I coach you guys like I wish someone would coach me, just like Logan, like shut up. Like you don't understand what it takes. Like you don't do enough. Like you think you're smarter than you are. It is the biggest reason that I stayed poor for so long, that I made less than $5,000 for 3 straight years, is because I actually thought I knew. Now, when I see that in people, like it's really easy for me to see that in people because like I was that person. Like if you guys are able to see flaws in people, it's because like you have that flaw or had that flaw. Katie was on a on a on a on a on a coaching call, or excuse me, not a coaching call, on a 20-day challenge sales call last week. Again, I told you guys we had a bunch of people who applied for it, and the girl was just getting started. She was making less than $5,000 a month. And Katie, you can say this better than I can, but like tell it like what was her biggest concerns about joining the 20-day challenge?
I don't even remember. You got to prompt me a little bit better.
The one with the website where she didn't want to use our website.
Oh, yeah. She had her own website. She wanted to just use her current website because people could directly book on it.
Yeah. And it was just like in those moments that just like I felt for her, but I also understood that like it's not our job to convince somebody. So we just were like, no, like the challenge isn't a good fit for you. But it's because people think that they know better. Like you're doing less than $5,000 a month, and you're on a call with somebody who just did $250,000 a month, and you want to do it your way rather than doing it their way. It's just ego. It's just ego that doesn't let you see that like what you're doing is not working. And this girl had been in business for a while. It wasn't like she just started. Sorry if I said she just got started. Like her revenues appeared like she just got started, but she'd been like, but she'd been in business for a couple of years, and it was just like one of those. You got to get out of your own way. You got to get out of your own way. And so, needless to say, like getting to 60K, like guys, like it's a freaking really cool milestone. Like I appreciate every single person who can get to 60, because also what gets you to 60, there's the same sort of like there's different devils at each level. However, like if you got to 60K, then like the devil to get to 80K, like you could do it if you're willing to sacrifice, if you're willing to like give up what feels good at 60K to get to 80K. And then same thing, are you willing to give up what feels good at 80K to get to 100K? Are you willing to give up what feels good at 100K to get to 150K, right? And that's why most people eventually stop growing, is because what is required to get to the next level is giving up the comfortability at your current level. That's the trade you make. So like right now, if you're stuck at $10,000 a month, like you must trade in the comfortability of like $10,000 a month to get to $20,000 a month. That's the trade. Okay, so back to our profit margins here. So we started at 100% of our revenue. We minus 55% of our COGS. So now we're at 45%. Katie, what is our next big category that is going to show up on our P&L?
Yeah, so this is also wages, but this is office staff wages, virtual assistant wages, and then if you do pay for coaching, the wages that you pay towards coaching as well.
Yeah, so again, this is why I put this line for 60K, because if you're below 60K, like you should be the only one in the office with a virtual assistant. Okay, most people jump the gun. A lot of you guys on here have jumped the gun, and some of you guys have had to fire that person and then done it the I won't say the right way because there's no such thing as right or wrong, but I've done it the more fundamentally,
the more sustainable way.
More sustainable way is like learn how to grow the business first, and then what you have just learned, teach somebody else how to do it second. It's very challenging to both learn and teach at the same time. And if you yourself haven't grown the business and then you're trying to teach somebody else how to do it, like you take away from you being able to not only learn, but your ability to also learn how to coach, because they're ultimately two different skill sets. They're both important, but they're really hard to do at the same time. And so, yeah, so your office wages, Katie, what is this going to be? What is the number? What is the percentage? What are we going to do?
12%.
12%. 12%. Okay, so 12% is going to encompass your other office staff, and it's going to encompass your virtual assistants. And this is also, I put this in there for coaching because like I really see this as like where does coaching get put inside the P&L? And this is really where I see it put. And this is why a lot of times I would suggest that most of you guys don't hire office staff early, is instead invest in coaching, which is you investing in learning the skill set of number one, doing, and then you learn the skill set of teaching. But a lot of times people want to shortcut that process, and then they have no money, and they're like, I'm too broke to even afford coaching. It's like, yeah, because you're paying somebody else how to do something very inefficiently, and you don't even know how to teach them how to do it. And like instead, if you were, again, I would recommend that you be the one who learns the skill set, something that you can take with you forever. Invest in the coaching of like how do you learn how to number one do, and then how do you learn how to teach, and then you have that forever. And then at that point, you have enough revenue to then be able to pay for office staff and also coaching and also be under 12%.
I think one of the most important things and why people skip it is they don't want to learn themselves. Like they don't want to look like a silly goose for that amount of time. But the most important thing to learn prior to having somebody else come sit next to you to teach them is actually having a standard. Like you have no idea what this position should look like.
Yeah.
So how do you know how to teach them what revenue marks to hit, how much new money to bring in, how many leads you need, how much we need to spend on marketing? Like you need to go figure it out first. You need to set the standard of what's possible of producing $5,000 to $10,000 in new money every single week before you go have an expectation that somebody else can do that.
Yeah. How many phone calls need to be made? How quickly you need to respond to leads? How to handle phone interviews? How to move a phone interview to a Zoom interview same day? Like these are just things that like if you skip the process, you just make you make an already inefficient process even more inefficient by having somebody who's not trained, who's not the business owner, who doesn't have the skill sets to make it better, make it worse actually. And so that's why I'm very much an advocate of like, you go first. And it's cool because Julie's on here. She asked a good question. So all these categories, Julia, these numbers, they're all going to be uploaded in the school group. Okay. So all these percentages, you don't have to write down notes. If you want to, that's totally fine. But once James uploads this call, he's also going to put our notes in here, which is going to put the percentages for each category on here. Okay. And speaking of Julia, so I talked about this last week, but Julie's one of the people who just hit one of the milestones in the community. She had $83,000 a month. And for you guys who are unfamiliar with her, she just started her business in September of 2024. So in 13 months, she went from zero business zero business experience, by the way, zero cleaning experience, never cleaned a day in her life, to growing $1 million business. Do you guys think that happened on accident? Absolutely not. Absolutely not. Everything she did was on purpose. From day one, she had access to the system. She started coaching with Katie at $20,000 a month. So she had the business $20,000 a month, and she's like, I'm going to do coaching with Katie. And she did monthly coaching with Katie up to $20,000 a month. And then once she got to about 70, I was like, Julia, I'm taking you. Sorry. But I can see the path on that to help you grow. And then, I switched her to going weekly. And this month she'll probably do $100,000 a month. Okay. But one of the things that we just talked about on our meeting today was like, she has grown something. Like, so she was talking about her goals. And I was like, and I chuckled just because like I've been where she has been. And I was like, dude, like those goals are really simple. Like you've already achieved the goals. Like I know you haven't seen them come to fruition, but like you've already done the work. You've got the skill sets. Now it's just almost just like checking the boxes off to put yourself in a situation to actually have those goals become a reality, but you've already done the work. And so one of the things I shared with her, which I want to share with you guys too, because I thought this was so important, is that most people do just enough to get what they think freedom is. They do just enough. And I've been that way too. Like this is, again, back to like I told you guys earlier, like I've been this person. And so my goal is to make it so not only do I get what I want, but I have enough that I can continue to give even more. And so with Julia, I was like, dude, you can do that. Plus you can do a lot more things. And but it's because you did the work back here and you just kept going. You could have got comfortable at 60,000. You could have got comfortable at 70,000. You could have got comfortable at 80,000. And the reason why you keep pushing is because like, whether you realize this or not, but like you're going to put yourself in a situation that you can achieve your goals, but now you're going to have the room to start helping other people achieve their goals because that comes from a place of abundance. It comes from a place of like, you have enough to serve you that eventually, like when it comes to the main resources of money, time, like those things can get taken care of. And then at that point, you get to choose where you put your attention at. Okay. And attention is the thing that really is finite in the sense that, you only have so much attention that you can actually give and give well. And so learning the skill set and then eventually being able to teach somebody how to actually do what you just did in the office, like that is so integral to you actually growing this $1 million business. And so now
keeping the $1 million business. It's one thing to hit the milestone one time, but can you consistently hit it and get the trailing 12?
Yeah, that's so important. Yeah. And that's back to like, there's so many different seasons and there's so many different levels of this. And that's why we're talking about this too, because like some of you guys are maybe just on your way up. Like you guys are maybe below 60,000, but like, it's important for you to understand that like there is a game after making money and it's keeping money. Okay. And just understanding that there is lots of games that you can continue to play this game for a very long time. Okay. So now we start with 100% of revenue. We minus 55% for COGS. So we're at 45%. And now we minus 12 for office wages. So what does that put us at?
33% left.
33% left. Okay. So we got 33% left of our 100% revenue. So let's talk about the next category. Okay. So this category, what is this one right here?
This, before we talk about the categories, I just have to make another disclaimer. These milestones are for businesses above $60,000 per month. So for all you hooligans that haven't hit 60 yet, this is after 60. So go make some money first. But this one will help you make money. So this one is marketing. So this is marketing for both new clients and fulfilling cleans with clients, but also having team members available. So this is for client acquisition and cleaner acquisition.
Yeah. Now, the reason that this is 6%, guys, it's important, is like this is for people who are above 60,000, because a lot of you guys, if you look at your P&Ls, you'll see that your marketing is like 10, 15, 20% of your revenue. And that's why this does not scale like below 60K. Okay, this is why. This is one of the biggest ones. And so like when you spend $1,000 a week, that's $4,000. You're making $100,000 a month, that's 4%. Okay. When you're spending $1,000 a week and your business is making 20,000, which again, like we had to do that with Mesa, and some of you guys are probably doing that now, that's 25%. I think, right, Katie? You can
a little.
Do the math on that.
4 times 5. It's 20.
Yeah.
20%, not 25. 20%.
20%. 20%. Pretty big difference. Pretty big difference. Right. And so, but again, like this is why before we talk about these profit margins, remember step one, what Katie said, get to 60K. Don't care how you get there. Like forget all this information. If you're not at 60K, forget it. Get to
Per
at
month.
least 60K per month. Yeah, sorry. Okay, so if you guys don't know the inside joke, so we had a cleaner who used to clean our Arizona house before we moved down here. And what was her name, Katie? I
Navy.
Navy, yeah. And so when we started our cleaning business, Katie made a comment that we had a cleaning business in Montana. And we were starting a new one down in Arizona, so we were no longer going to need her to clean our Airbnb anymore. And then Katie told her that that the business makes $100,000 a month. And Katie, do you remember what her response was?
Oh yeah, me too.
No, she said, I made $100,000 last year too.
Yeah, me too.
And so it's just like most people like again they don't listen because they have too much ego, but it's just one of those things that like what is possible, right? What is possible? But again, like if you're making $100,000 a month versus making $100,000 in a year is going to be whether you can spend 6% on marketing or not. But this is one of the expenses, guys, that will make you more money. And so when you're first getting started, like just spend, like you just need clients and you also need cleaners. So most of the time you'll spend more money on clients than you will cleaners. However, I have seen it where might spend more money on cleaners than you will clients sometimes. Like there's different seasons, right? But both are included inside the 6%. Okay. And Bozeman's actually a pretty good example because like right now we actually spend more money on cleaners than we do on clients in this very moment. And we have for the last couple of months, where in Mesa, it's quite the opposite. We spend a lot more on clients than we do in cleaners. So, but that's why we combine these two together is that you can basically, if you need to turn down clients and you can give some of that ad spend over to cleaners. And that's why we did it this way, is that you just like readjust that 6%. Sometimes you give 3% or 4% to clients and 2% to cleaners. And sometimes maybe you might give 4% to cleaners and then only 2% to clients, but you have a little bit of wiggle room between like how you allocate the 6%. Okay. So we're at 33%. And now we subtracted another 6%. So what does that put us at now?
27.
27. Okay. So we have one more category left. Katie, what is this category?
This is other office expenses. So if you rent an office space, if you pay utilities, if you pay for laundry, your phone, your CRM, go high level, ZenMaid, Jobber, whatever you use for scheduling, all of those expenses.
Insurance, office supplies, basically any other miscellaneous expense that you guys like. What about this one? Just put underneath this one because this is where like, how many of you guys have offices as an example? Yeah. Some people's hands didn't raise, guys. Right. And so again, not everyone has an office in this very moment. And so like you could allocate some of that money that you were supposed to put in an office and maybe you spend more somewhere else. Maybe you spend more on laundry as an example. Right. So like, for example, like what we did is we didn't have an office and then we were paying for laundry. And instead of paying for laundry, we decided that we were going to pay for an office that had laundry in it. Right. But this is just basically gives you like a framework of saying I have 7% here. And how do I allocate some of those monies? Right. Things like go high level, things like ZenMaid, things like QuickBooks, like those are things that like you're going to pay like regardless, you're not going to be able to like move those things around. But rent, laundry, insurance, like those are things that have a little bit more of a variable cost. That like rent in Arizona is different than it is rent in Bozeman, and it's different than it is in California. It's gonna be different than it is in Canada. It's gonna be different than it is in other freaking states, right? So, but if you just understand like those are like that's the category that you would put those into, then what you might experience is that you might need to put a little bit more money into marketing as an example, or a little bit more money into office wages because you have less expenses in office as an example. So like we just share with you like a good template to get to 20%, but understand that like you can move office to 10%, move to 14%, and you can allocate some of these things around. But these are the basic categories that you're going to utilize in order for you to get to 20%, because 27% minus 7% is what, Katie?
20.
20. Easy math, easy math. And when we say profit, what does actually profit mean? So this is important. Like, what is actually profit when we're talking about profit, what does it actually mean?
Yeah, profit is net income, so revenue minus expenses, whatever's left, plus owner's pay, plus any add backs if you pay home office things, if you pay for a vehicle through the company, any personal add backs, those also are incorporated into your 20% profit.
Retirement accounts, if you guys do any sort of retirement, like those are considered, that's actually considered profit. Okay. So those are, those are all things that would be considered under your profit margin. So again, be really clear with K-type about like net income. So look at your P&L. And if you look at the very top, it's going to show revenue. At the very bottom, it's going to say net income. So it's going to be that number. And then if you do pay yourself on salary, so some people do, some people don't. Like if you're an S corp, then you would. And if you have an owner's pay on there, then you would add owner's pay plus net income, and that would include your profit. And also, if you had other things like retirement accounts, if you had a home office that was just your home, that would be an add back. If you expense your vehicle through it, that would be considered an add back as well. So those are a few things that you would include in your total profit margin. Cool. So now we have a 20% profit margin. Katie, again, like I said earlier, is 20%, will you always do 20%?
No,
Why?
because every month has variation. As an example, October this month has 5 Fridays in it, and our payroll runs on Fridays. So we have 5 payroll expenses this month. Every quarter, we have about one of those months. So that month is less profitable.
Yeah. And so that's the reason that we actually track our profit over the course of a quarter, is to account for the 5 payrolls, also the good months where you have 4 payrolls and 4 working days. And we just discovered that having every quarter, if we track our profits over the quarters, then that gives us a more realistic idea of like where our business is at. And so let's actually do this, Kitty. I know I didn't share this with you, but will you pull up Bozeman and do the last quarter so we can let's just do some math. And won't go through all the categories. We don't have time to do all the categories, but we can just do what's the profit percentage. And this is a good example, guys, because we actually have somebody who actually runs this company. Katie and I don't live in Montana. Haven't lived in Montana for almost 2 years now. And the only reason this business continues to grow without us is because we have somebody who is compensated like an owner, who is treated like an owner, and who like treats the company like she is an owner. Okay. And that's Laya. And so, like for you guys who are inside the community, you guys know who she is. If you guys are not in the community, then you would never know who she is. But today's actually her birthday, and so she's actually off today. Took her day off, and it's cool because the business can even run without her. Like that's cool too. Now, could run with her forever? Absolutely not. But it can run with her. It can still run day to day without her, which is also a cool piece as well. But last quarter, Bozeman had its best quarter ever. Like it was so good that I sent it to Katie, but then I also sent it to Alex, and I also sent it to Dr. Kat. I was like, check this out, guys. And so it's like when you start to put some of these things together, like it's like you can do things that you would never have thought possible, right? And so if we do a little bit of math here, so we're going to take last quarter. So Katie, what is do you have the?
There's actually a filter that Lucas taught you on the P&L that you can actually just see this. If you click compare and then click percentage of income,
Oh yeah,
it'll do the math for you.
Okay, cool. So do you have those open?
Yeah.
Okay. So what is the total revenue last quarter that Bozeman made in top line revenue?
And a quarter, July, August, September, top line revenue, Bozeman did $434,000.
So we have 434,000. And then, so again, I'm just going to go to the profit. So that's all I really care about. And then what did it net?
Net income was 88,000.
88,000. And then what was the owner's pay?
Owner's pay was 21,600.
So the total owner's pay for last quarter was 109,000. And then we divide that by 434,557. And so the profit margin was actually 25% last quarter. So so sometimes it's above, and then sometimes like this quarter, it might be below, right? But even if it did 15% this quarter, if you average those out, it'd be 20%. Okay. And so I think one of the cool parts though about this, guys, is like this is what it's not going to show up in this quarter, but how is a business able to grow without the owners actually growing the business? Like that's the question you guys should be asking. How does the business grow without the owners actually growing the business?
To pay somebody like an owner.
You got to pay someone like an owner. So some of you guys are familiar with this, but we actually pay Alaya, a portion of her income is based on profit share. So you guys saw 109,000 for the owners. You guys are like, yeah, that's cool. But I want you to understand this from the person who's growing the business and understand that she gets a percentage of that profit. Katie, what was her profit share check? Just one check, guys, one check.
22,000.
So do you think that she's incentivized to increase the profit too? Do you think that she likes the business making $100,000 a month or in a quarter? Okay.
Hell yeah, she does.
Cool. So this is why this is important, guys, for you guys to understand this, is because like eventually if you want to put yourself in a situation where you want someone else to be able to grow your business, like you have to incentivize them properly, but you also have to be able to do it first. Like you have to grow the business, teach them, and then also incentivize them. And the one way you can do that is if you keep growing your business. And so back what I was talking about with Julia earlier, like you guys need to continue to grow. Like I know it seems like $60,000 is a lot of money, $80,000 is a lot of money, $100,000 is a lot of money. I understand that. But you get more freedom as you get bigger. And so continuing to reinvest that money back in to the growth of business will be the best decision you ever make. The best decision you ever make. Okay. Okay. So I want to share a couple things real quick. So I've been very fortunate that all the one-on-one clients that I have, they're actually all to this point. Everyone has got to $60,000 a month. And so I've been able to help them and be able to look at their books and be able to help other people than just my own business be able to not only make money, but now learn how to keep money. And so I'm very grateful that you guys who are on here, that you guys give me the opportunity to be able to help you with that. And also for me to be able to learn how to help other people with that rather than just only have my own perspective. But I want to share some things that I've learned by helping other people that might help you guys as well. So when it comes to bookkeeping, when it comes to taxes, like it's the next game. Like once you learn how to make money, then the second game is how to keep money. And so that's why like this Thursday, for everybody who's inside the coaching community, we're bringing our tax guy in. Taxman Tom is coming in on Thursday. And the goal is to provide value for you guys. And so you guys understand how to avoid taxes legally. Okay. Understanding why bookkeeping why like having a bookkeeper and keeping your books clean will actually make you more money than it costs you. And the second piece of that is just understanding like, how do I actually manage my money? If I'm actually like making money, how do I make sure that I manage it basically into these categories? Okay. And so that's for everybody inside the community on Thursday. Make sure you guys are on that call. But one of the things I want to share with you guys are what I call rule breakers. So these are some expenses that I have seen that like either I have done or I've seen other people try to write things off that are not allowable expenses. Okay, so there's 6 of them. There's 6 expenses here that I want to share with you guys that people try to write off, but Uncle Sam says, no, 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 you can't write these things off. So, Katie, what is the first one here? It's actually 2.
Federal and state income taxes.
Dang it. Dang it. So if you guys end up making money, your reward is you got to pay taxes. And so not only do you have to pay taxes, but that expense that check that you write to the government or you write to your state, you can't expense it against your income. Like it's not an expense. Dang it. Dang it. Dang it. What else, Katie? What else is an expense that I can't write off? Uncle Sam says no.
Self-employment taxes.
Ooh, these are big too. These are big too. So this is like Social Security. This is like Medicare. These are your state and federal taxes. Dang it. Can't write them off. Okay. What's the next one? What if you decide not to pay your taxes? You're like, I'm not paying taxes. What happens then? Or you pay your taxes late.
Penalties, tax penalties are interest that the IRS charges you.
Yeah. Do you get to write those off?
No.
Oh, dang it. Dang it. Okay. What else? What else is on there? This one, this is the one that I see a lot.
Credit card payments. So if you appropriately have a card associated with your QuickBooks, it will have you categorize every transaction that that card makes. And then it will also ask you to categorize the payment. And you can only do one of those two. You can't double deduct charges using credit cards.
Yeah. So the recommended way of accounting is you just account for each expense individually, and then the credit card payment is a non-expense because you can't double, unfortunately. What else, Katie? What else is something that you cannot deduct? Oh, so we haven't told this to anybody, but probably save it for a different day. But we actually bought a building. We bought a building for Bozeman, and we had to put a down payment down.
And
we
you
wrote that
can't
off.
use that as an expense.
We couldn't write that off?
No.
Dang it. So nope, we can't. Down payments for real estate are not write-offable. And if you guys happen to like either buy a business or anything like that, like those are also not write-offable as well. So any sort of acquisition of a business or real estate is not an expense you can write off. And what's the last one, Katie? What's the last one that people try to write off?
Owner's distributions.
Yeah, so if you take money to the bank account and you call an own distribution, like that is not a write-offable expense either. Because again, it's like you get taxed on the income regardless, and so you can't also you can't deduct the actual distribution. So those are the 6 rule breakers that, again, hopefully you guys, if you guys do your own bookkeeping, or if you are the one who inspects your books, then you start to see these on there, and hopefully you able to inspect these and realize that these are not expenses that you can write off. And if you do have like a tax guy like Tom, then he will come through there and be like, yeah, that's not write-offable. That's not write-offable. One of the things that we used to write off, which we thought was correct, was for all of our real estate, we used to write off all of our mortgage payments. And unfortunately, you can't do that. You can write off the interest, but you can't write off the principal.
Interest and insurance you can write off, but not
insurance.
The principal payment.
Yeah. So so like we made all these mistakes, guys. Just so you guys know, like we've done all these things like lots of times. And so I just figured these were things that I'd share with you guys so you guys can learn the skill of bookkeeping, learn the skill of understanding what is write-offable, what isn't write-offable, and learn how to, once you actually learn how to make money, well, how do you actually keep money? And how do you keep it legally as well? So, all right, guys. Well, I appreciate you guys for showing up today and learning about how to keep a 20% profit margin. Again, if you guys weren't on here in the very beginning, this replay will be uploaded into the school community. If you're inside the free, or excuse me, if you're inside the paid coaching program, it'll be under the road to 1 million replays. James will upload it, and he'll put this doc in here as well, so you guys can have access to all the percentages as a good template for you guys to go off of. And if you guys are inside the free community, the free home cleaning courses group, then it'll also be uploaded in there as well. Same thing. It'll have all the percentages in there as well. And again, if you're in the free community and you're interested in coming and hang out with the handsome, beautiful young people in the paid group, like the Tristans and the Tylers and the Dons and the Randys, and Don and Randy are actually in the challenge right now. And you guys are interested in the challenge, there is actually one spot still available for right now. And so you guys can apply. James will drop the link for that. And then for you guys who are already inside the coaching program, and if you guys are like Don and Randy, you guys are in the challenge, get on the call on Thursday. So this is a call for people who are just inside the community. We're bringing our tax guy in to share with you guys how to avoid taxes legally, understanding the ins and outs of bookkeeping. And also, if you guys need an advisor, that's also why we're bringing him in as well, is to give you guys an opportunity to have an advisor with somebody who we have a lot of trust in. And we've gone through lots of accountants in our day, and so also being able to provide a referral for people who actually are looking for that as well. So again, thank you guys so much for showing up today. Appreciate you guys for showing up with your with your Zoom screens on, and even some of them with them off. You guys participate in the chat, and really hope you guys got value today. And again, the goal is just that we continue to be able to build and continue to grow something that creates an abundance of resources that we have enough to not only take care of ourselves, but then we can really do the second game, which is help other people. And there's so much fulfillment in watching other people create financial freedom. So much freedom in having people be able to come from a place of abundance and being able to come from a place of like self-respect and honestly acquiring skills and understanding like how powerful that really is, and then being able to then not only for you to acquire, but then for you to be able to then teach it to the next person. That's what this is all about. So Kayla and Lori and Alyssa, Don, Randy, Kayla, Renee, Alicia, Megan, all you guys for in the chat. I super appreciate you guys. Happy Monday, and we'll see you guys later in the week.
Bye-bye.
Bye, guys.